If you're looking for a rental property, now may be your chance. With the continued economic devastation brought on by the COVID-19 pandemic, rental properties may be cheaper next year. Some landlords are struggling to find tenants for their properties. The rate cuts also serve to slash rental and bond installments by noticeable amounts. John Loos, a property strategist at FNB, unpacks this with us. Good afternoon, John. Thanks very much for your time. So, to start off with, what does rental occupancy look like at the moment?
Well, it's gone up to over 10%. It's TPN's estimated vacancy rate, very much a survey and a perceived vacancy rate, so it's not a hard number. But it has been rising even before lockdown. This is not much to do with lockdown. This has got to do with an economy that had been deteriorating for some years, and rental tenants, some of them coming gradually under more financial pressure, and so you've just seen the vacancy rates rising up into low double-digit figures, just above 10% nationally.
Did we see a sharp fall during lockdown as people just couldn't afford their rentals anymore, or some were laid off?
Well, I think it's too early to see what the impact is on vacancy rates of the tenant population yet from lockdown. But what we did see in the second quarter TPN numbers was a sharp drop in the percentage of tenants in good standing. That was up nearer to 80% before the lockdown, and but in the second quarter it went down to about 73%. So a significant drop in the tenants in good standing with their rental payments, showing significant additional pressure. And I guess from that, what we could see in the coming quarters would be some further increase in vacancy rates as a result.
John, lending rates are at an all-time low, and in terms of property, it's definitely a buyer's market. Are we seeing people who formerly would have rented now moving into the property owning market?
Definitely seems to be that way. Our estate agent survey, our FNB estate agent survey, saw a very big increase in activity levels in the market. Mortgage originators have been reporting significantly higher growth rates. I think one just has to be a little bit careful. Some of that demand is delayed purchases coming through that would have come through during lockdown. But the general impression is that it's something over and above that. It's also additional demand. It's not just delayed, postponed purchases because of the lockdowns. It's also 3 percentage points worth of interest rate cuts. We do know that the residential market tends to respond more significantly to interest rate cutting than the commercial property sector. The commercial property sector more driven by economic factors. And it does seem that way, and it certainly seems that a lot of these buyers are first-time buyers as well, who would have been rental tenants in many cases, and now taking advantage of the low interest rates. Typically what they do, the affordability improves because of a drop in interest rates, and a lot of first-time buyers think that's the time to buy.
What are your projections for rental prices next year?
I think we could go into some mild deflation. If we look at the CPI for rentals inflation rates, as per Stats SA, that's come down from, if one goes back to 2017, at one stage it was above 5% year-on-year rental inflation. That's dropped all the way by the most recent survey in September to 1.4%. And I think that there's some lagged impact from the economy and from the lockdown shock on tenants. So I think that will continue to decline, and possibly by early next year we could see the -1%, -2% average national rental inflation. But rental inflation typically doesn't fall through or deflation. Rental prices don't on average fall through the floor quite like say, for instance, house prices or, price values they can respond more significantly. But I think we're in for a period of rental deflation on a national average basis.
So that's good news for tenants, but it's not good news for property owners. How do we bolster the sector?
Yeah, look, I think this is, already in recent times with rising vacancy rates, it has been a time where, if a landlord's got a good tenant who might, they've got to try and look after them and probably proactively give them a good deal. Finding good tenants is increasingly difficult. And of course, the last thing you want is a bad tenant. So, I think it's a bit of give and take. And I think where landlords do have good tenants who may have come under additional financial pressure in this significant recession. I think it's about being accommodating and looking after them. But I think in the near term, it is just going to be a battle. That's the thing about the residential property market is, it's never just good all over the place. When the home buying market is really surging like it has in recent months, expect the rental market to possibly go the other way, because a lot of those tenants become buyers, and it leaves a bit of a gap in the market for some time. The weak economy as well slows household formation. So in many instances too, what you find is, because of a lack of new job creation at the moment and even job loss, you find that youngsters who may have been living in their parents' home delay that departure for longer into the rental market, so that doesn't help. And of course, when you lose your job, sometimes as a young person, you have the option of shutting down your household, so to say, and moving back into your parents' home. Some do that. So yeah, it's typically not a great time for the rental market for a while.
Well, thanks very much for that insight. That was John Loos, a property strategist at FNB.